Guys, today I want to talk about some first-time homebuyer programs that some of our clients have been using to absolutely save a lot of money. So in this category, there's two main options that we've been using the most. The first program is actually a program that Fannie Mae is rolling out in 2023, where it's a conventional loan that essentially takes away all the hits that you would normally incur for your credit score and your down payment. And let me explain what I mean by that. So typically when you're doing a conventional loan, if you have an 800 credit score, you're going to get a better interest rate than somebody who has a 640 credit score. Or if somebody's putting 40% down, they're going to get a better rate than somebody who's putting 3% down. That's what conventional wisdom tells us about conventional loans, no pun intended. Now with this new program that we were able to release in the wholesale space a few weeks back, everything I said goes right out the window. So somebody with a 620 credit score only putting 3% down is actually going to get the same amazing interest rate as somebody with an 800 credit score who's putting 30% down. This means that right now as I'm speaking in this video, we can literally take somebody with a 620 credit score, putting 3% down, and get them a 30-year fixed interest rate in the high fives, and that's not including any kind of seller paid buy downs that could actually bring that rate and payment tremendously lower than that. Now you're probably saying, okay, Eric, what's the catch? It literally sounds a little too good to be true. Believe me when I say it's not too good to be true, and we're doing it every day. The only caveat is this. If you're a first-time home buyer, you can make up to 100% of the area median income. So for example, where I live in the Minneapolis area, 100% of the AMI is just a little bit under $120,000 per year, which is a pretty generous limit for a first-time home buyer program. What if you're not a first-time home buyer? You can actually still use this program, believe it or not, but the income limitation is going to be 80% of the area median income. So where I'm at in the Minneapolis area is going to be roughly about $95,000 per year. So I'm getting calls from realtors right now left and right about this program because many of them have clients that were pre-approved FHA at a much higher interest rate. I'm able to take those clients out of FHA, move them into a conventional loan with a lower interest rate, typically with lower mortgage insurance than what they would have paid on FHA. And last but not least, FHA has that 1.75% funding fee that gets rolled into the loan. That's a lot of money. That gets completely wiped out by moving over to a conventional loan. So the next question is, what if I don't have a 3% down payment? I have no money to put down right now. That's okay. We have a backup plan and it's still a good one. The next program I'm going to tell you about is a 100% financing program, and what truly sets it apart from most 100% financing programs is that the 3.5% down payment grant is 100% non-repayable. Let me explain what I mean by non-repayable. It's free money. Free, F-R-E-E, free. Most down payment assistance programs are either bond programs or programs that are through a local municipality where you have to be in the house for a certain amount of time for that to be forgiven, if it's ever forgiven. Some aren't forgiven at all, meaning that if you sell your home 10 years from now, you still have to pay that back when you sell the home. Many of these actually won't subordinate. What does that mean? It's almost like a second mortgage lien against your home in a way. So let's say if rates do come down in the next year or so and you try to refinance, some of these actually will not subordinate that loan, which literally will prevent you from refinancing unless you want to pay the entire thing off, which really is not a preferred option. So with the program I'm talking about, this particular 3.5% grant is free in the sense that it will never go against the title of the home and you never repay this in any way, shape, or form. It is literally like a friend or a family member gifting you the money and saying, go buy your new home, don't worry about paying me back. It's truly that good. So what's the catch on this program? There really is not a catch. The only thing you really need to be aware of is that the underlying loan, the first mortgage, is going to be an FHA loan. So you will have the 1.75% funding fee that will actually get rolled into the mortgage. It's not coming out of your pocket, but it's still getting rolled into the loan, which is ultimately going to increase that loan amount a bit compared to, say, a conventional loan like I described previously. And don't misunderstand what I was saying about FHA loans. There's a time and a place where FHA is actually the best option for certain circumstances, and FHA does actually offer some advantages that are not offered even in the conventional arena. For example, when interest rates drop and you want to refinance, FHA offers a streamline which allows you to literally reduce your interest rate with no appraisal required, no income documentation required. And the beautiful thing about an FHA streamline is that your new loan amount is going to end up within $500 or $600 typically of wherever your payoff was at on the previous loan. And so what this means is you're not racking up all those closing costs again. So you're essentially just walking away with a lower interest rate and a lower monthly payment. And that's the way FHA intended it. For anyone looking for more information about some of the first-time homebuyer options I've discussed in this video, or even subsequent homebuyer options, feel free to give us a call at 651-994-9494 or email me at teamoros@reducedfeemortgage.com. For more useful information like this in the future, please like this video and subscribe, and also follow us on Instagram and Facebook, which you can find down in the description below. Thanks for spending some time with me today, and I look forward to seeing you again soon.